Hey, Tej here. Today we're taking a look at technical analysis for crude oil, or the US oil. I'll cover wave analysis with Elliott Wave theory and provide multiple scenarios the price may take, and explain why I prefer one count over another. Let's take a look at the different possibilities. Starting here on higher time frame on 8 hour, the overall idea was that we had some kind of wave 4 going on in here. We had that overlap between in here, so that is the reason why we were looking at this structure like so. We had a very high RSI number or RSI read in here, which is why we are having this as one of the third waves. Whether this is a third of minute or third of something else, more bearish intermediate for example, is up to the analyst still, but again, definitely we are going to be having some issues soon if the price is going to get fallen down here at $85.5 area, in which again we would get back to this wave 1 area. Then we would definitely need to be looking into this structure a bit more. At the moment, however, we had this bullish invalidation come in. In this bullish scenario, we were looking at the idea of wave 4 being in here. Overall, of course, this is invalidated now as we have gone beyond the wave 1 start here for the wave 2, so that's invalidated now. It had many other issues as well. We were looking at this multiple times saying that this is most likely not going to be happening, and this was the preferred count. Let's go to 2 hour maybe. In this one we are again looking at wave 4, in which we have A, B, C into A or W, three-way structure into B or X, and then again looking for either five-way structure or a three-way structure. We'll look into that next. So I have a couple of different counts overlaid here, but let's start with the most obvious one, saying that we have a 1, 2, 3, 4, and 5. That brings us to wave 1 or A wave. Then some kind of three-wave move back up here into wave 2 or wave B. At that point again, we could be looking this next structure as a 1, 2, 3, 4, 5, ending a possible C wave here. That is not mandatory that we end here. There is a scenario in which we are ending it later, but again, that is one scenario. After that point, we could be having this structure like so as some kind of connector wave, and then we would be having some kind of a structure downwards again. Again, this would not be supported by the higher time frame count expectations as the invalidation points are coming in closer. At the moment, my preferred idea is still that we could have this as a 1, 2, and while we can't have this as a 3, 4, why? Because we are getting overlap between these structures here. We could be having this as a wave 1, so another wave 1, 2. Again, this would not really go with the overall higher time frame expectations, but again, if we are getting lower than the previous mentioned areas, then we could be looking into reconstructing the higher time frame count, as this lower time frame count is again more valid and more precise. What else? In here, let's take a look at the other option. In this leg, we could have this as some kind of expanding diagonal. This would fit only into the idea of this being an A, B, and then C wave. The extension here, minimum requirement is right here at this 88.9 area, in which we would get that 1-to-1 extension of the third wave for the fifth wave. So we can't have a truncation here as an expanding diagonal. So wave 5 needs to be larger than wave 3. That's why we have it here. So only if the price gets below this area, we can validate this idea. Now let's jump into this structure over here that we are having. Let's go to 30 minutes. In this, I've labeled this as a wave 1, 2, 3, 4. After that point, it gets a bit iffy, not to say anything. There's one here, through a pullback here, that is clean. Then again, 1, 2, and then a massive dump. This would of course entail us that there is some kind of a third wave, but look at the RSI. We are having massive bullish divergence here right now at the lows, but I can't really get this to be a third of anything unless I have this structure as an expanding diagonal here. But again, as you see, when we are pulling the trend lines around it, it does not look like that at all. If we are measuring this, we can see that 1-to-1 extension is right here, meaning that this structure is larger than this one, which would mean that we need to have a larger, meaning expanding diagonal. Now, why this is contracting looking is the way, or how long the wave 2 took to create. So again, if we are measuring this, we can see that fifth wave is larger than third wave, so expanding diagonal, that fits as well again. And I think I measured this as well, and if it's, yeah, possible wave 4 would be larger than a wave 2 as well. So if we only measure, we can be saying, sure, we have an expanding diagonal in this structure, but if we are putting trend lines around it, it looks like a contracting diagonal. So it does not fit the picture at all for me. So that's why I don't like that. Instead, I'm thinking this as a 1-2 and another 1-2, right? And this would be a third. And we would get some kind of extension here on the fifth to end something. And again, according to the higher time frames, this would be possibly ending a 1-2, and this would be the third. But we'll see how it turns out. I might need to relabel some of these structures as well. But I'm still on short after this rejection from the wave 2. It was pretty good looking structure. That's why I shorted. I think I was shorting down here after we broke through these lows, and it had, we saw, or at least I saw this, well, that was not a drawing tool, this area here as a support and resistance. We went straight through it like so, and we had a small retracement and down, then down, and that's where I shorted. But yeah, that was what I'm expecting at the moment. More downside for sure. I can't really see us getting any bottom in just now, although we can see that wave 3 here, if we are looking at this as a 1, 2, 3, wave 3 here did almost get to the 2.618, so we don't need to be expecting an extension here on the fifth wave. However, we can say that again, if it did not reach the 2.618 here, we can be expecting an extension on the fifth. And again, on commodities, it is more common to have the extension on fifth. But again, I'm not quite sure, and I'm not experienced enough on the commodities side, saying that we can have this, as we already had this massive extension here, or if this is even considered extension on commodities, yes, with the 2.618 extension here. But we'll see what happens. I'm staying in my short. I'll set my stop losses somewhere about above the wave 2 here, or possibly just above the wave 1 to at least get some profit in it. But yeah, that's my scenarios at the moment. If you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below. And yeah, thanks for watching, and see you on the next video as well. Bye bye.